Hello, investors and traders, and welcome to the weekly market report with the market guys. I'm AJ Monty. This is a one-year daily candle chart of the CBOE Volatility Index, ticker symbol VIX. And I'm starting off with this one because each and every week I talk about this as being my favorite leading indicator. And as you can see, I left my lines on the chart from last week's report, where I drew more or less a 2-week forecast. I said that the VIX would most likely pull back a little bit. It did that on Wednesday. And then I said we would most likely rally, with the end of that line being my target at the end of the 2 weeks. So with that said, let me forecast out again. I'm just going to extend another week out so you can get an idea of how I do this. And this diagonal line, again, is what I'm thinking the VIX is going to do next week as it makes a move to test resistance up here. So I'm going to leave that in place so that next Friday we can look back at what was forecast, and then you can see how accurate the charts are. And they are very accurate, and I hope that you're learning each and every week from this report. Now again, the volatility index is inversely related to the S&P. So now I'm going to go right to the S&P and more or less highlight what was the forecast for last week. I said that we would move lower and then possibly bounce off of this 20-period moving average. Now we did a little bit of that on Wednesday, but look what happened on Thursday. And that's a pretty significant red candle. And if you look a little bit more closely, you'll see that that red candle was on higher volume. Today's volume wasn't as high, but it's still a red candle. And the significance of this is that the S&P closed down below that 20-period moving average. So now any chance of a rally is more or less diminished as the market looks like it's shifting below that 20-period moving average. So I'm going to erase all the lines that I've drawn in the past, and I'm going to forecast that the S&P next week will most likely drop. I don't think it's going to be an extreme drop, but I think in this angle is what we can see. Now, again, I repeated this last week. I get these angles from looking at past angles. You can see, as I draw speed lines here, you can see that the angle at which the market drops is very similar to what we have here, and that's I'm drawing these lines more or less parallel to these angles back here. So the end of the line is my forecast for the S&P. So I'm going to leave that in place right there. Now if we look at the Qs, this is the NASDAQ market, ticker symbol QQQ. I said last week that we would most likely pull back, with the end of that diagonal line being my target. We actually hit that target on Tuesday, and then we bounced. And after we bounce, you see this little gap right here. After we bounce on Thursday, we have a bearish engulfing pattern. So again, that's bearish for the general markets as well as this more specific tech sector, the Qs. I think that we're going to move down below that 20-period moving average. So I'm going to, again, erase all lines to clean the chart up. I'm going to make my forecast line look just like that. Again, similar angles as what we saw in the past. And you might wonder, well, why did I stop right there? Well, right at this level, if you look to the left, you'll see that there's a former resistance area that was broken right here on June 1st. And if I project this out, you'll see that former resistance, once broken, turns to support. So I think we could see a pullback right to that support. Whether or not we'll bounce, it's too soon to say. We'll have to wait and see what happens there, and then we'll make our forecast after we see a bounce or a breakdown in that. But my target is the end of that line right there. Now if we look at a more broad-based index in the Russell 2000, I said that we would pull back, and we rallied early in the week, but then look, again, a bearish engulfing pattern right here. So I'm just going to move this line over and even have it breach that 20-period moving average, because like the Qs, I think we're going to see a breakdown below that moving average and possible test of support down here, which again is a roll reversal support level. Now finally, the diamonds. The diamonds did not move in line with the other markets. We didn't see any kind of a bounce as I expected, and that's okay. But the key here to watch out for is that we are now significantly below that 20-period moving average. And so now the moving average is going to act as a resistance point. This was former resistance up here, but I'm going to draw my resistance right at that 20-period moving average now and make a projection that we could see a little bit of a rally early on in the week. But ultimately, I think we're going to pull back from that moving average and see lower prices. And that's my forecast for the diamonds. Finally, on July 23rd, I'm heading to Chicago for the Traders Expo. I've been invited to be a speaker there. If you are in the area or if you'd like to attend, this is a free event. And there's lots of good speakers out there. I'm speaking on July 23rd. Right here, let me just give you the correct date. July 23rd from 11:15 to 12. They've asked me what spot I wanted, and I picked the one right before lunch. Why? Well, I've been around for a while, and I'll tell you, the after lunch crowd is a very tough crowd to talk to because they're so filled with food. They lose, the blood from their brain. It goes right to their stomach, and I am certainly not going to have anyone falling asleep in my presentation. It's going to be an action-packed 45 minutes where I'll be talking about managing risk in volatile markets, with a focus on the cryptocurrency market. This is what they've asked me to present on, and I hope you could join me. If you are going to be there, send me an email through the Market Guys website. I would love to meet with you, maybe even sit down with you for lunch if we have a good hour break, and we can answer questions and at least get to meet. It's a rare opportunity where I get to meet people face to face, and I certainly hope you can make it for that. So have a great weekend, and we'll talk to you soon. So long.
This video segment is a small part of what the Market Guys offer through their educational products and services. If you are interested in any of our Trade Alert services, or you would like more information about our one-on-one mentoring program, simply contact us at info@themarketguys.com.